Hey everyone, welcome back to Corporate Decoder. Today, ALUR just filed a 1 for 15 reverse stock split, and I am seeing a major push to get back on a bigger exchange. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making a big move to tidy up its stock and potentially find its way back to a major stock exchange, like the NYSE. Alright, let's dive into this filing from Allurion Technologies Incorporated. They've officially announced a reverse stock split, which is a move companies often make to boost their stock price and meet exchange listing requirements. The big news here is the reverse stock split that officially happened on the 12th of June 2026. This is where a company reduces the number of its outstanding shares to increase the share price. Think of it like taking 15 pennies and turning them into 1/4 the value of each individual coin goes up, but you have fewer coins overall. Specifically, Allurion is doing a 1 for 15 reverse stock split. This means for every 15 shares of common stock a shareholder owns, they will now have just one share. The idea behind this is often to make the stock price look more substantial and meet the minimum price requirements for major stock exchanges. Companies sometimes do this to avoid getting delisted or to get listed on exchanges like the NASDAQ or New York Stock Exchange. Now, this split has some interesting effects for shareholders. To avoid issuing tiny fractions of shares, which can be messy, they're rounding up. So if you would have ended up with a fraction of a share, you'll now get a whole share. This is a pretty shareholder-friendly way to handle fractional shares in a reverse split. You'll also notice a temporary ticker change. For about 3 weeks, the stock will trade under ALURD before going back to its regular ALUR symbol. This is pretty standard practice after a reverse split. It helps keep investors aware that something has changed with the share structure. This reverse split doesn't just affect regular stock, it also means that all other equity-related items like stock options and restricted stock units will be adjusted proportionally. This keeps everything fair for those who have these awards. The exercise price for options will go up, and the number of shares you can get with those options will go down, but the overall value should ideally stay the same. And what about warrants? The filing also details how the outstanding warrants, like the ones that trade under ALURWS, will be adjusted. The number of shares you can buy with a warrant will decrease, and the exercise price will go way up to match the reverse split. For example, the exercise price for their public warrants is jumping to $3,037.5. Per share, this is a massive increase, but remember, it is adjusted for the 15 to -1 split. You are no longer buying 15 shares for a lower price, but rather one share for the new higher price. This is crucial to understand because it can look scary if you don't factor in the split. Beyond the reverse split itself, the company also put out a press release on the 17th of June 2026 to share this news. This is where they tried to frame the move positively, talking about supporting a potential relisting on a major exchange. Now, as with any of these filings, there is a lot of forward-looking language. They talk about their ability to maintain regulatory approvals, the timing of clinical studies, market evolution, intellectual property, economic conditions, and importantly here, their ability to regain compliance with continued listing standards for the New York Stock Exchange, or to meet initial listing standards for another exchange. This all points to a company that has likely been struggling to maintain its listing on its current exchange, which is often the OTCQB market for those trading under ALUR. Reverse splits are often a last-ditch effort to boost a stock price above the minimum threshold required by exchanges like the NYSE or NASDAQ. Historically, many companies that undergo reverse splits, especially smaller ones, eventually end up delisting anyway within a few years. For example, when Kodak did a 1 for 20 reverse split back in 2021, holders saw roughly a 40% additional drawdown over the following 90 days. A $1,000 position there became about $600. This is a risky maneuver. The filing also includes exhibits, which are the actual documents like the certificate of amendment to their incorporation and the press release. The cover page interactive data file is just for electronic filing purposes. Finally, the report is signed by Shantanu Gaur, the Chief Executive Officer. This confirms the information comes straight from the company's leadership. So, what is my take on this? Allurion Technologies is making a bold move to clean up its stock structure and hopefully make itself more attractive to major exchanges. The reverse split, especially with the rounding up of fractional shares, is a direct attempt to increase the share price. However, the success of this move hinges entirely on whether they can overcome the underlying business challenges that led them to this point. If the business fundamentals aren't strong, a reverse split often just delays the inevitable. The risk I am watching is whether this is a genuine attempt to relist and grow, or just a cosmetic fix before further issues arise. What I am actually looking for is evidence of improved business performance and market position that justifies this stock maneuver. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you found this analysis helpful. Please like and subscribe for more deep dives and join our Discord community linked below.